If you want to protect your money and make millionaire moves in the stock market, you need to see this. Right now, the biggest tech companies in the world are losing billions, and those who understand what's happening can turn this crash into the investment opportunity of a lifetime. While most people panic, the smart ones are getting richer. And after this video, you'll know exactly what to do. The stock market is falling fast, and AI companies are at the center of it. Nvidia, Google, Meta, all crashing overnight. And the craziest part? A small Chinese startup triggered this entire collapse. If your investments are tied to AI, your financial future is on the line. But don't worry. This video will show you how to stay ahead, protect your wealth, and even capitalize on the chaos. Stock market crash in the US tech sector. The US stock market is in chaos and tech giants are feeling the heat. Nvidia alone lost nearly $600 billion in market value, dragging down other major companies like Google and Meta. But this isn't just a typical correction. It's a market earthquake, shaking the foundation of Silicon Valley's dominance. The Nasdaq plunged more than 3% in a single day, leaving investors scrambling for answers. Even those used to market swings are alarmed. Something far bigger is at play. A Chinese startup, DeepSeek, might be the trigger, introducing a disruptive force no one saw coming. This isn't the first time Wall Street has seen a meltdown, but this crash feels different. It's not about inflation, interest rates, or political instability. It's a direct hit to the tech sector's most valuable asset, artificial intelligence. When AI companies fall, the entire economy shakes. Nvidia's 18% drop in one day sent shockwaves through the market. Investors who once saw AI as an untouchable goldmine are now questioning everything. If one startup can shake trillion-dollar corporations, what does that mean for the future of tech investments? DeepSeek's AI model isn't just another tool. It's a financial grenade thrown straight at Wall Street. With promises of a 94% lower cost than OpenAI's ChatGPT, it's forcing major players to rethink their entire strategy. And when tech giants panic, their stock prices plummet. Markets thrive on stability, but this is pure uncertainty. Hedge funds are adjusting positions, institutional investors are dumping shares, and small investors are left wondering if their AI-heavy portfolios are about to go up in flames. The impact of AI on stock values isn't new, but never before has a single startup caused this much damage overnight. When OpenAI launched ChatGPT, it boosted the AI sector. Now, DeepSeek's arrival is ripping it apart. If one disruption could do this, what happens when more competitors emerge? Investors have long believed in AI-driven wealth, but the market is now teaching a brutal lesson. Technology is only as powerful as its competitive edge. If one company can produce better AI with a fraction of the cost, the game changes completely. For years, AI stocks were the golden ticket to financial success, drawing in investors chasing that next big millionaire-making trend. But Wall Street has a short memory. When an industry faces disruption, even the biggest winners can turn into losers overnight. Tech stocks aren't just struggling, they're free-falling. And if you think this is limited to Nvidia, think again. The market's biggest names, Google, Meta, Amazon, are all caught in the storm. And the panic is just beginning. What's happening now is a massive wealth shift, and those who understand the game will profit while others watch their investments burn. So, is this a disaster or an opportunity? That depends on what you do next. To understand what's truly happening, you need to look at the root cause of this market chaos, DeepSeek's AI breakthrough. This is more than just a new competitor. It's a fundamental shift in how AI is developed, and it's sending shockwaves through the industry. If you're finding this breakdown valuable, hit the like button and subscribe to Rich People Club so you never miss insights that could help you stay ahead in the game. The impact of DeepSeek on the AI industry. DeepSeek didn't just enter the AI market. It shook it to its core. Unlike OpenAI and Google, which spent billions developing their models, DeepSeek claims to have created a powerful AI for just $6 million. If that's true, it's a game changer. For years, the AI race has been a billionaire's playground. Only the richest companies had the money, the computing power, and the data to compete. But DeepSeek just kicked down the front door, proving that AI development doesn't have to cost a fortune. It's not just about cost. It's about accessibility. DeepSeek made its AI open source, meaning anyone can use or modify it for free. That's the opposite of what OpenAI, Google, and Meta have been doing. Suddenly, the biggest advantage these tech giants had, exclusivity, is gone. This is a nightmare for companies that built their business on owning and selling AI access. If anyone can get a high-powered AI for free, why would they pay for ChatGPT or Google's Bard? This isn't just competition. It's an industry-wide shakeup. The speed at which DeepSeek's AI is spreading is shocking. It's already the most downloaded AI app in the US, surpassing ChatGPT in record time. In Brazil, it ranks second, but at this pace, it won't take long before it dominates worldwide. People love cheaper, faster, better technology. And that's exactly what DeepSeek promises. If it delivers, it could erase the advantage of billion-dollar AI companies overnight, turning a once exclusive market into a free-for-all. But there's an even bigger reason why tech giants are terrified. DeepSeek built its AI without using Nvidia's expensive chips. That's unheard of. Nvidia has been the go-to supplier for high-performance AI processing, but now, DeepSeek has proven those chips might not be necessary. If DeepSeek's approach catches on, other companies will start using the same cost-cutting methods, reducing their reliance on Nvidia's pricey technology. That's why Nvidia's stock is crumbling, because their biggest customers might not need them anymore. Open-source AI isn't just a threat to individual companies. It's a threat to entire business models. If innovation is happening outside of Silicon Valley, and for a fraction of the cost, the balance of power in tech is shifting fast. The tech elite never expected this. They assumed AI would stay locked behind corporate walls, controlled by billionaires and monopolies. But now, a small Chinese startup is proving that the future of AI might belong to the public, not the corporations. This raises a critical question. If a small team with limited resources can create an AI that rivals the best in the world, what else don't we know? Maybe AI isn't as complicated, or as expensive, as we were led to believe. And if that's true, the entire market for AI-driven companies could collapse. What happens when trillion-dollar businesses suddenly aren't worth what we thought? That's exactly why Nvidia took the biggest hit and why Wall Street is panicking. Why Nvidia was hit the hardest? When a gold rush happens, the real winners aren't the miners. It's the people selling the shovels. In AI, Nvidia was the one selling the shovels, providing the high-end chips that powered every major AI company. But what happens when someone figures out how to mine gold without shovels? DeepSeek's AI breakthrough did something no one expected. It cut Nvidia out of the equation. Instead of relying on Nvidia's expensive GPUs, DeepSeek developed its model using far cheaper alternatives. That alone was enough to send Nvidia's stock crashing by 18% in one day. For years, Nvidia was untouchable because AI companies had no choice but to buy their hardware. Every new AI advancement meant more demand for Nvidia's chips, driving its value into the stratosphere. But DeepSeek just proved that AI can thrive without them. This was more than just a stock dip. It was a direct hit to Nvidia's core business model. If AI development moves away from expensive GPUs, Nvidia's revenue could collapse overnight. That's why investors aren't just nervous. They're running for the exits. AI was supposed to be the future of money, a guaranteed path to wealth and power. But if Nvidia is no longer an essential piece of the puzzle, then its trillion-dollar valuation is suddenly up for debate. That's a terrifying prospect for Wall Street. Other AI companies are watching closely. If DeepSeek's model proves successful, Meta, Google, and OpenAI might follow the same path, cutting Nvidia out entirely. And once that happens, the domino effect will be brutal. The real danger isn't just that Nvidia is losing sales. It's that the entire AI market might be shifting. The idea that only trillion-dollar companies can dominate AI is crumbling, and if Nvidia isn't at the center, who will be? Hedge funds that were betting on Nvidia's continued growth are now scrambling. The company was once the ultimate AI investment, but now, some analysts are wondering if Nvidia's stock could fall even further as more AI startups follow DeepSeek's lead. Nvidia built its empire by supplying the AI revolution, but revolutions are unpredictable. When the tools become cheaper, the people at the top start losing control. And Nvidia is learning that lesson the hard way. What happens when a company built on monopoly pricing suddenly faces competition? The market corrects violently. Investors are waking up to the fact that Nvidia may not be the untouchable giant they thought. The tech world moves fast and power shifts even faster. Nvidia's stock crash isn't just a fluke. It's a warning sign. If the AI industry is changing, then every company tied to it needs to rethink its future. And that brings us to the bigger picture. If Nvidia's fall is just the beginning, what does this mean for the entire US stock market? The risk to the US market and what to do. The US stock market doesn't like uncertainty. When investors sense weakness, they sell first and ask questions later. And right now, AI stocks are looking shakier than ever. That's why this crash isn't just about Nvidia. It's about the entire economy. Tech stocks are the backbone of the US market. The S&P 500 is nearly 30% tech, meaning when AI companies fall, they drag down everything else. That's why banks, hedge funds, and even non-tech companies are feeling the heat. This is a reminder of a painful truth. Nothing in investing is guaranteed. People thought AI stocks were invincible, a one-way ticket to becoming a millionaire. But history has a way of humbling even the most powerful industries. The market operates on confidence, and confidence is fading fast. If investors start doubting the future of AI giants, billions more could be wiped out overnight. The ripple effect could extend beyond tech, pulling down entire sectors like finance and consumer goods. Some investors see this as a disaster, but the smart ones? They see opportunity. Market crashes create buying windows that can change lives. The ultra-rich don't panic sell. They buy when everyone else is afraid. That's why diversification is key. No smart investor puts all their money in one place. Spreading investments across different sectors, asset classes, and even countries is how the wealthy protect their fortune. Right now, some of the biggest names in finance are rebalancing their portfolios, looking for undervalued assets. Could this be a golden moment to buy AI stocks at a discount, or is there an even bigger crash coming? Understanding market cycles is what separates winners from losers. The rich don't fear downturns. They use them. This AI shakeup is either the end of an era or the start of a new one, and the ones who adapt will come out on top. The biggest risk isn't just AI stocks falling. It's that investors might start questioning the real value of trillion-dollar companies. If AI innovation is becoming cheaper and faster, are companies like Google and OpenAI really worth their sky-high valuations? This shift could lead to a major correction in the US stock market. If the tech sector was overinflated based on the idea that AI required massive investments, and that turns out to be false, we could see even more sell-offs in the coming months. But one thing is clear, the power structure in tech is changing. If DeepSeek can rewrite the rules of AI, then who knows what's next? The future of wealth is being decided right now. Are you paying attention? Before making any big moves, investors need to ask themselves, is this an AI revolution or just another market illusion? Those who understand the answer will be the ones who come out richer. If you're serious about building wealth and staying ahead of market crashes, hit subscribe right now. The stock market is shifting, and those who understand the game will come out on top. This isn't just about surviving the AI revolution. It's about positioning yourself to profit from it. While most people panic, the smart ones seize opportunities. Every second, billionaires are adjusting their strategies, setting themselves up for success. At Rich People Club, we bring you the insights the wealthy don't want you to know. Don't just watch. Take control of your financial future.